Hello, ladies and gentlemen. Good morning to you. And I'm so excited to be here this morning with you. Let's confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that I can get a positive feedback that I can kickstart the session, please. So I would like to see some comments in the comment section. I would like to see some feedback, please. Kindly confirm you can see my screen and you can hear my voice by typing hi in the comment section. Okay, let's see what we have here. All right, Gatita, thank you very much. 038, thank you. Good morning. Good morning, 799. Francesco, good morning to you. Thank you very much. Hi, Carrie. How are you doing today? Good morning. All right. Thank you very much. So I would like to take this as a positive feedback that we are good to go. I'm so excited to welcome you all to yet another promising session on the Extreme Speed Live. My name is Sharif Daramola, and for the next 1 hour, I will be your host, where we shall be evaluating the financial markets using technical parameters to identify trading opportunities lining up for us today. Well, as usual, the first thing we are going to be doing this morning is to review the economic calendar. Remember, yesterday we were anticipating the Fed chairman's testification before the House of Congress, and it was quite an hectic one, and in fact very hawkish comment that we had there. So so that we can be on the same page here, before we dive into the chart, I was able to pull out some highlights which I would like to share with you guys here so that we can have a better perspective into what our expectations are on especially the US dollar. Now on the from the highlights coming in from yesterday, this was what I was able to pull out. Hold on a second, let me load this up here. All right, okay, hold on a second. Okay, I'm trying to okay, so we have the Fed hold on a second please, I'm trying to. So the Federal Reserve Chairman Jeremy Powell warned on Tuesday that the central bank may have to push interest rates higher than previously expected in order to curb inflation. Then he further warned that in the testimony before the Senate Bank Committee yesterday, that after a series of economic indicators that indicates the economy is running stronger than expected despite the aggressive action from the Fed, that there is a likelihood to raise interest rate more aggressively at their next meeting in 2 weeks if upcoming data shows similar strength. Then Powell also suggested that interest rate may ultimately have to climb higher than the 5 to 5.5% range that policymakers had predicted in the month of December last year in order to bring price under control. Presently, the Fed's benchmark is currently at between the 4.5 and 4.75%. The US will release February jobs data on Friday, that is the NFP, which we're all looking forward to, which will also be followed by the monthly inflation report next week. Now, what is the market reaction to this? In reaction to this development, analysts said the comments were more hawkish than expected, and this development sends traders and investors to price in a higher chance of a 0.5% hike than the expected 0.25. So what this simply means in that regard is that majority participants in the market have started to demand for the dollar, and we are beginning to see the reaction in that regard on the chart as price action has significantly increased in the last 24 hours. And it's important I state here that the the testification still continues today. That is, in the next 4 to 5 hours, the Fed chairman is going to be still having a meeting with the House of Congress today, so it's going to continue today. We are going to be looking forward to that too as well. Then another macroeconomic event coming up today is the ADP employment change. So this is also an high impact event we want to be looking out for. And from the data we have here, the previous data came in at 106,000, and we have a consensus of about 200,000. That's quite positive for the dollar. So are we going to see a continued rise in the dollar during the New York session today? So these are the things we are going to be looking forward to as well. Then later on today, we have the gross domestic product for Q4 that will be affecting the Japanese yen. This is coming up much more later in the day, so we might likely be seeing some anticipation in that regard on the USDJPY as well. And let's look at the chart in that regard. So on this note, let's dive into the current market structure. Let's see what is really going on in the market right now. So as usual, the first commodity we are going to be looking at this morning is the US oil. And in fact, the US oil broke down that bullish trend line. So what was our expectation during the live session yesterday? So what were we looking at when we were doing our live session yesterday? Okay, so the week has started on a bullish note for us here after we took advantage of the breakout of the $79.40. We had another position at the breakout of the $80 area, and in fact price moved considerably well, and we were able to scoop about 50 to about 90 pips thereabout before we started seeing this consolidation phase during the live session yesterday. And considering the current structure that price action was consolidating, we felt that this might likely be in anticipation of the monetary policy report, and we were looking forward to ways through which we can take advantage of any trading opportunity based on that structure. And we considered the fact that price has been bullish, hence we placed our buy stop order above the $81 level, hoping that price will break out that structure to trigger another buy position. And another thing we noted here was this bullish trend line, which we'll definitely identify that we shall be using it to guide trading activity for yesterday. And one thing we stated here yesterday is that if price action continues to trade above that bullish trend line, we shall feel comfortable in our buy position. However, if price action drops below the trend line, that is, breaches the trend line to the downside, this will be a beautiful signal for us to join a decline. And this was exactly what happened. Like I said yesterday, that if price action drops to the downside, breaking down that bullish trend line, then it took us out of our buy position, as we had moved our stop loss to the entry point at the $80 area. We saw some retest of structure around the $80.40 level, and then boom, we had our sell stop order below the structure, and price action dropped drastically to the downside. We also had an opportunity to add more position to our existing trade, as we saw the breakdown of that support line we identified at the beginning of the week, just around the $79 area. So with the two positions we had here, the first position gave us about 250 pips in profit, and the second position gave us about 140 pips in profit. So for those who have been part of this profitable journey, you are well done. Kudos to you for being on standby to catch this move as price action hit our TP target at the $77.50 area. Now, going into the New York session today, what is going to be our plan? What are our expectations here? Well, if we look at the current market structure here on the 1 hour time frame, this is what I was able to identify here. Ever since price tested the $77.20 area during the later part of the New York session yesterday, we saw how price action appeared to have been caught with a consolidation phase between the $77.80 area and the $77.20 level. So we have the support level of the channel here, and we have the resistance level of the channel around this area. Now, with this kind of situation here, you all know what we are looking out for. We need to be very patient at this point, as we need the breakout of the channel to give us trading opportunities. Like a breakout of the $77.80 level is likely going to be giving us a buy opportunity, and if price action breaks down the $77.20 level, it will be giving us a sell position. Now, to further understand what is really going on around here, it is very important that we scale up into a much more higher time frame to see how price action has been evolving from an holistic point of view. And in this regard, I want us to scale a little bit higher into the 4 hours time frame, where you will begin to see things more clearly. Now, on the 4 hours time frame, remember we had the structure figured out at the beginning of the week, where we acknowledge the fact that we had a breakout of that bearish trend line, which has been holding bearish momentum in the last 3 weeks. That was last week's trading session, and we were lucky enough to be part of this bullish momentum as we saw the breakout retest of both the $76 level and the bearish trend line. And since last week's trading session, we have seen a situation here where price action has continued to find higher highs and higher lows at this point. Now, when we connect the series of higher lows here, remember at the beginning of the week, we identified this bullish trend line, which we said might likely be a yardstick for trading activity in the nearest future. And if you look at what has happened here in the last 16 hours, as we saw the bearish engulfing candle taking us out of the $80 level, we saw that as soon as price got into the $77.50 level, an area which shares a beautiful confluence with that bullish trend line we just identified, now we started seeing a consolidation phase around that area, hereby emphasizing the indecision in this current market. At this point in time, you would agree with me that we are at a critical point in the market, where price action is currently trading just exactly around the $77.50 level, and the bullish trend line we just identified here, which has been supporting bullish momentum since last week's trading session. Now, with the situation we have right now, the next question we want to be asking is, will price action respect this bullish trend line one more time to incite another wave of bullish momentum? Or will this consolidation phase around this area transition into a trend continuation pattern where a breakdown of both the $77.50 level and the bullish trend line will be an opportunity to join a decline to the downside? So these are the two futures we shall be looking at for today. And in order to have a better perspective and in order to make a well-informed decision at this point, we will need to scale back down to the 1 hour time frame to look at what is really going on around this area to make a decision for today. Now, scaling back down into the 1 hour time frame, what did we see? So like I told you earlier, we can see that price action has been consolidating there. In fact, we have a well-defined channel where the $77.80 level has been serving as a resistance point so far in the last 10 hours. And then we have the support level at the $77.20 level, where we have been witnessing buy pressure as every attempt by the sellers to break down that structure has been negated by the buyers at every point in time. Now, with the situation we have here, and considering the fact that we have a strong bearish engulfing candle in this case, we might likely see the situation here, the structure here, transition into a trend continuation pattern in the form of a bearish rectangular pattern. Maybe, as you can see, if this consolidation phase continues, a breakdown of the $77.20 level, which is the support line of that channel, will transition into a trend continuation pattern to trigger a sell position in this market. So that is one perspective here. And if we take a further look into the current structure here, that is what has been happening since the beginning of this week. Remember, we identified a bearish trend line after connecting the series of lower highs here. As you can see, we have this bearish trend line figured out since the beginning of the week. Price was initially respecting that trend line before we saw the breakout of that structure happened, and then we saw price break down that structure again during the later part of the New York session, and since then price action has been trading below the trend line. So what this simply means is that when we go into the New York session today, in order to guide any selling opportunity in this market, we want to be using these two structures to guide our trading activity. So in order to sell the USOil, we want to see price action continue to trade below the bearish trend line. and at the same time below the $77.20 area for us to feel comfortable in our sell position. So what are we going to be looking forward to sell actually? Well, we need to see price action break down the support line here at the $77.20 level, break down retest, probably selling pressure below that structure in our lower time frame to confirm that we are good to sell. So let's see how price action plays out in that regard. So for any selling opportunity here, we are only looking at anywhere below the $77.20 area, while the bearish trend line which we identify here will continue to guide that bearish momentum to the downside. That's if the bearish momentum happens. Now, with that being said here, after considering the long-term sell pressure here in the market, we cannot ignore the possibility that buyers is very strong in this current structure as well. And the reason why I have said that, I was able to scale up into the 4 hours time frame here to show you the importance of this bullish trend line that we have here. And in the last 12 hours, we can see price action has continued to trade right around the trend line, where we might likely see a situation where price action will respect that trend line one more time. And that will be a bullish opportunity for us in this market. So how do we intend to join that rally if the bullish momentum becomes the case in this market? Well, if we zoom at the channel here, you all know that we should be looking forward to a bullish momentum if price action ever breaks out of the $77.80 level, taking out all the sell position here, and at the same time climbing right above that bullish trend line, which also shares a confluence with the $77.50 level. So right above this area, we could be having a buy stop order there. And with that kind of situation, if you're having a buy stop order around that area, ensure you can afford a stop loss of about 70 pips thereabout, as our stop loss will be right below the $77.20. And if we are lucky enough, we start seeing another wave of bullish momentum as price action come back to do a retest of that structure, further giving us a confirmation that buyers are still very strong in this market, we will be adding another position to our existing trade. Now, there is one thing about this buying opportunity here. If it so happens that price action breaks out of the $77.80 level, this is going to likely turn out to be a counter trend opportunity. Remember, we already have a bearish engulfing candle which happened in the last 24 hours in this market, as we saw the crash from around the $81 area into the $77.20. And this might likely be this counter trend opportunity at the breakout of the $77.80 level might likely turn out to be a retracement of that impulsive move, where price action coming into a golden zone area, or the structure where price action started this week, which falls within the $79 and the $80 level, to trigger another wave of selling opportunity if a reversal pattern is identified around that area. So these are one of the things we want to be looking out for going into the New York session today. And I hope you screenshot my screen so that you can use it as a reference point as we continue to monitor price action in that regard. So right now, we want to be patient here, hold on for price action to give us a signal, which is definitely going to be coming in the form of either a breakout of the channel to the upside or a breakdown of the channel to the downside. So let's be on standby, and let's wait out for this opportunity to happen. If you have questions, feel free to drop your inquiry in the comment section. So I will be going on to talk about the next option here, which is the US tech. So I will be checking the comment section from time to time to see if there are any questions in that regard. Now, moving on, the next commodity we are looking at is the US tech. And in fact, the US tech is also another profitable trade for us yesterday. And looking at the structure we have here on the 1 hour time frame, let's quickly take a technical dissection of what our expectations were during the live session yesterday. Now, this new week started on a consolidation phase, as there was like an indecision in this market, as price action traded between the 12,350 and the 12,260 level. And as a result of this, we identified the resistance point for the week at that level, 12,350, Then we had the support line for the week sitting at the 12,260 area. Though we had some bullish attempt at the beginning of the week, we bought initially at the breakout of that 12,350. We added more position at the breakout of the 12,400, and you all know we move our stop loss accordingly to secure the position before the sell pressure resume again, taking us out of all the buy position. And one thing we observed within this current structure here yesterday was the fact that price action appeared to be evolving into a reversal pattern around this area. And this was observed after taking into consideration the impulsive move that started last week. So after taking into consideration this impulsive leg, this is what we saw. We saw a beautiful reversal pattern in the form of a head and shoulder pattern. That was the left shoulder. We have the head, then we had the right shoulder here as price action was unable to break above the left shoulder, as you can see. And then we had the neckline of that head and shoulder pattern sitting along the bullish trend line, which has been guiding or supporting the bullish momentum since the beginning of this week. Now, what we said yesterday for us to sell the US tech is to see a breakdown of the neckline, which will definitely confirm the validity of that reversal pattern we identified. And in order to take advantage of that trade there, I was able to identify a key structure at the 12,315 level, where I said we should be having our sell stop order right below that structure for us to be able to join that decline to the downside. So with the sell stop order below the 12,315 level, we had our sell position triggered as price action has moved about 190 pips in our direction before we started seeing the consolidation phase that began during the later part of the New York session yesterday. And for those who have been part of this position right here, kudos to you for being on standby, as you will currently be running in profit at this point. Now, in as much as we had that first position running, we had another opportunity to add more position at the breakdown of the $12,200 level, which was suggested during our live session as well yesterday. Now, moving the stop loss now, we want to secure the current position, and the most appropriate area to move our stop loss is somewhere right around the $12,200 level, as we need to give some room for price action to breathe, with the hopes that price action will be continuing to the downside. Now, with the situation we have in this current market structure, after moving your stop loss, we can see that price action has been consolidating in the last 12 to 14 hours now. As you can see, as soon as price tested the $12,130 level, which appears to be the support line at this juncture in the market, we saw the rejection of the sellers at the 12,170. So with the situation we have right now, we have a beautiful flat channel which has a tendency of doing a trend continuation pattern at this point. Now, if we take into consideration the impulsive move that started yesterday, crashing into the zone, we might likely see this price action movement evolve into a trend continuation pattern in the form of a bearish rectangular pattern, where the breakdown of the $12,130 level will be the signal we are looking out for to sell the US tech for today. So that is one perspective here. So I'm actually leaning towards a sell continuation in this market, considering the bearish momentum in this market and as well the reversal pattern we identified earlier. However, if we zoom out a little bit and see what has been going on here since last week, and considering the bullish momentum that started at around the 11,830 level on Thursday last week, looking at the impulsive move here, and as we can see, price action appeared to have incited a retracement phase, we might likely see price action culminating the retracement phase around this area. As you can see, in the last 12 hours, we can see buy pressure has resumed around the 12,120, negating all attempt by the sellers to break down that structure. And if the buy pressure, if price is unable to break down that structure, we might likely see this situation here transition into a trend continuation pattern, which might be the end, which might incite the end of this retracement phase that we have here. And if that's going to be the case, we might likely see a breakout of the resistance point of the channel at the 12,170, where buying pressure above the structure will further give us a confirmation that another wave of bullish momentum is about to begin. So these are the things we are going to be looking at on the US tech here. So I would like us to be on standby on both occasions, as this might likely be the end of the retracement phase that we have here in this market. And another thing we want to look at is the breakdown of the $12,315 level, which was broken yesterday, might likely be another bust stop where price action could come in if it happens that a breakout of the 12,170 happens. So we might likely see something like this: price action breakout of the 12,170, buy pressure, breakout of the 12,200, which will definitely welcome an additional position in that regard, and price might come back into the zone between the 12,260, which was initially the support line for this week, and the resistance point for this week at the 12,350. So we might likely see a situation where a reversal pattern could evolve here to incite a trend continuation to the downside. So while we continue to monitor price action, we want to keep all these possibilities I just explained here in mind. In order not to make things complicated here, this is where we are focusing on right now. That is the area between the 12,170, which is the resistance point of this channel, and the support line here at the 12,130. So we are looking forward to either a breakdown or breakout of this channel for trading opportunity for today. So let's be on standby to catch this opportunity if it so happens. Alright, so if you have questions, feel free to drop your inquiries in the comment section while I move on to the next pair. Alright. So for those who are still in the US tech, kindly move your stop loss accordingly, secure your position as we anticipate more opportunities on this commodity. So moving on now, we are going to be moving on to the next pair, which is the GBPUSD. And in fact, on the GBPUSD, we also have a very profitable position here on the GBPUSD, as we saw our price crash significantly to the downside, and this was an immediate reaction to the hawkish comment from the Fed chairman. As you can see, the first position moved about over 200 pips in profit there. Then we had the second position at the breakdown of the 1.200 level with about over 180 pips in profit, and the third position here below the 1.1900 level, giving us over 100 pips in profit. And for those who have been part of this profitable journey, well done to you guys for being on standby to catch that move. And some of us will have taken some profits here, will have closed our position here. And for those who are still in this trade, I will be suggesting that you move your stop loss to anywhere below the 1.1880 level, just anywhere below that structure. Let's give room for price action to breathe here as we continue to monitor price action in that regard. Now, looking at what has been happening on this chart since the beginning of the week, remember we saw this situation where we started seeing selling pressure around the 1.20500 level, and this was throughout the whole week. Since the beginning of the week, we haven't seen that sell pressure, as the bullish momentum that began last week, which was emphasized by this bullish trend line, was unable to break out of the structure. As you can see, how sellers continue to negate all that attempt. And the breakdown retest of that bullish trend line was that key moment for us yesterday to get ready to join that decline to the downside. And thank goodness we were part of that position, as we saw price action drop significantly in our direction. So now that we are going into the New York session today, what is our plan? Are we still going to continue to sell the GBPUSD, or we might be doing some profit taking activities and we want to be part of that retracement back to the upside before another wave happens here? So these are the things we shall be looking at from this current structure. So hold on a second. Okay, sorry for the breaking transmission. I had a big bang outside, so I had to check for security reasons, but everything is fine. So we are back in, and where were we? What were we talking about anyways? I just missed that. All right, so we said we are going to be looking at the daily time frame to see what is really going on from an holistic point of view, which will definitely be giving us a clue into what our next line of action will be. We want to look at the structures. We want to see what is going on. If there are going to be profit-taking activities coming in behind the scenes, or we might be getting ready for another wave of bearish momentum today. Now, looking at the daily time frame here, this is what we observed at the beginning of the week. We can see here in the last 4 to 5 months that price action has been bullish on this chart. And when we connect the series of higher lows here, we have a bullish trend line which emphasizes the strength of the buyers in this market. Now, things got more interesting when price action tested the 1.24500 area, and this began in the month of December last year. And every attempt by the buyers to break out of the structure has always been met with a strong resistance from the sellers, and the selling pressure here continued into the first day of the month of February, that was last month, as we saw that breakdown of that bullish trend line happened for the first time in 4 or 5 months. And this was a beautiful signal that the trend line may no longer have that capacity to continue to hold that bullish momentum. As you can see, all selling pressure negating the bullish attempt here, resulting in the breakdown of that bullish trend line, which happens to be the first time that will have happened in the last 4 or 5 months. It's a very significant signal that sellers are likely coming in this market. Now, things got a new turn when we saw our price action came back into the 1.1900 level. Remember, this was where the new year started. The new year started at around the 1.19 area. As you see, the buy pressure resumed just exactly along that bullish trend line that was identified earlier. And with a breakdown of the trend line happened here, price action came back into the zone where price action has always been. And in fact, this zone has always been a strength for buying power since the month of November last year, as you can see here. And as we prepared for this new week, we were looking out for another. We want to see how price action will be reacting to the structure to decide if we are going to be buying for this week or we are going to be selling for this week. And the appearance of buy pressure above this area made us have a rethink that, okay, we might likely see this bullish momentum continue to the upside, but we need further confirmations, as we need a breakout of this trend line to happen to confirm that the bullish momentum is going to be strong. But since the continued selling pressure around the 1.200 level since the beginning of the week, we were lucky enough to be part of the sell position. And what you can see right now is a significant breakdown of the 1.1900 level, just with an engulfing bearish candle, which further emphasized that sellers are beginning to take over this market. So as price action breaks down the 1.1900 level, this is going to be the first time this will happen in the last 5 months. As you can see, price action takes out all the buy position in the structure. Hence, we need some liquidity that will further confirm that the sellers are strong in this particular structure. Now, to further confirm the strength of the sellers here, we want to see something like a retracement back into structure, where the appearance of selling pressure below this structure on our lower time frame will further give us a confirmation that price action will be going bearish. Now, the question now is, how do we intend to trade this? Are we going to wait for this retracement, a retest of structure, to happen before joining that decline? Or are we going to be getting ready to buy, since we are still around that demand zone at the 1.18500 level? Now, currently price action is trading just around the 1.18250 level, as you can see here. we begin to see some level of buy pressure coming in, as participants are probably seeing the pounds as cheap enough to buy here, as we can see some buy pressure coming in. And if we go a little bit to the left, far left, we can see that at one point in time during the month of November last year, we saw buy pressure around that area as well. So that level also has a memory for buying power, which we need to take into consideration as well as we take a technical dissection of this current structure. So now what happens around this area? So we want to scale down to a much lower time frame, like the 1 hour time frame. We want to see how price action is currently reacting to the 1.18100 area, to see if we are going to be having a reversal pattern from this level that will be inciting a bullish momentum, which is likely going to be a retracement phase in anticipation of a bearish move to the downside. That is one scenario. Or we could have a trend continuation pattern evolve around the 1.181 to see a breakdown of that structure to the downside. So join me as we take a look into the 1 hour time frame. So we shall be scaling down into the 1 hour time frame, and remember we are going to be taking the 1.18100 level as a technical structure to guide trading activity for today. So we are back at the 1 hour time frame, and this is the current structure we have here right now, and this is the 1.181 level. As you can see, very quite significant there. As you can see, we have been witnessing buy pressure around that area, making that level a significant support line for today. So going into the New York session today, we already have a support line that we need to be breached for us to have a confirmation that sellers are still very strong in this market. So in that regard, I will be having my sell stop orders sitting below the 1.18100 level to join that decline to the downside. And if it so happens that price action drops below the structure, my lower time frame, with selling pressure below the structure, will definitely want to be adding more position at the breakdown retest of any structure on our lower time frame. So this is my view here for a potential trend continuation pattern from this current structure. Now, what happens if the contrary comes into play in this current structure? And what do I mean by contrary here? Well, we have a resistance point already at the 1.184, and if we cite a situation where price breaks out of the 1.184 with buy pressure above this level, what do we want to be doing? Do we want to be buying? Are we going to be buying, or are we going to be holding on to see how far the retracement is going to go before we join the decline to the downside? Well, for those who are scalpers, who are comfortable taking counter trend opportunity, this might likely be a good opportunity to make a quick, how many pips is that? To make a quick 80 to 100 pips thereabouts. As you can see, if I zoom into the current structure, remember that we have the strong demand zone identified at the 1.19500 on the daily time frame, which was finally broken at the 1.19 level during the course of yesterday's trading session, which is a key structure that was broken. And from a technical standpoint, whenever we have a breakdown of a structure, what do we expect? We expect that price is likely going to come back to do a retest of that structure in anticipation of another wave of bearish momentum to the downside. So this is the case now. If price action ever breaks out of the 1.184 level, this might be an incitation of a counter trend opportunity, which is more or less seen as a retracement phase of the previous impulse leg. So if that happens, we start seeing buy pressure above the 1.184 level on our lower time frame, then definitely we want to be part of this counter trend. But like I said, if you are not a counter trend trader, you are not a scalper, you not feel comfortable taking this kind of position, you can stay out of this trade and wait for price action to come into our bus stop here around the structure around the 1.19 area and the 1.196 level to look out for selling opportunities, which will definitely come in the form of a reversal pattern around this area, and then we could join that decline to the downside. So this is what we are going to be looking forward to. And for those who are going to be joining if price action ever breaks out of the 1.184, please ensure that you move your stop loss accordingly as price action moves in your favor. As you know, we are already in a strong bearish move to the downside. We don't want to get caught up in any sudden pullback that has a high chance of coming in despite the breakout of the 1.184. So please and please, once you join that, move your stop loss accordingly, secure your positions, and let's see at the other side here where we will be looking out for selling opportunities to join a decline to the downside. So these are my views here on the GBPUSD. If you have any questions or inquiry regarding what I just explained so far, or you need me to shed more light in what I just explained, feel free to drop your inquiries in the comment section below. All right, so in the absence of no questions, I will assume that we're on the same page here. So I will be diving right into the next chart. So the next pair we are going to be looking at this morning is the XAUUSD, and in fact we have a similar situation with the XAUUSD as we saw how the US dollar rallied following the hawkish comment from the Fed chairman's testification yesterday. And what was our expectation during the live session yesterday? What were we looking at during the live session yesterday? Well, let's quickly run through that before we go into the details for today. So for yesterday's trading session, we had two structures that we said will be guiding our selling opportunities. And the first structure we identified was the 1,845 level, which you can see here. Then we also have the bearish trend line after we connected the series of lower highs. Remember, since the beginning of the week, we have been witnessing selling pressure on this chart. And when we connected the lower highs, we had this beautiful trend line. So we said that the trend line and the 1,845 is definitely going to be a yardstick for trading activity. And what this simply means is that if price action continues to trade below the structure, we shall feel comfortable in our sell position. And during the live session yesterday, we had a sell position triggered already as price action continued to drop to the downside. And for those who had missed out on this opportunity, I had two scenarios for you yesterday. I said you want to remain patient, wait for probably price coming back to retest structure before another wave of bearish momentum happens, or you have your buy sell stop order below the $1,839 level for a trend continuation to the downside. And in fact, the latter is what happened, as we didn't see price climb up anymore. We saw price drop to the downside, triggering the second position as price action rallied all the way down into the TP target at the 1,820. And with that situation, we had over 4,500 pips on those two positions. And if you have been part of that trade, well done to you guys for being on standby to catch that move. Now later on, we saw price action break down, retest the $1,820 level to trigger another sell position, further confirming the strength of the sellers at that juncture. And with the situation we have here, if you are taking advantage of that move at the 1,820, you would currently be running with about 600 to 700 pips at this point. Now, for those who are joined below the 1,820, or those who still have a sell position running in this market, the next thing we want to be doing right now is to secure the current sell position. And the only way we can do that is by moving our stop loss accordingly. And I think somewhere below the $1,818 level seems most appropriate to secure this current sell position as we continue to monitor price action. Now, since the beginning of this morning, since the early hours of today, we have seen a situation where price has been trapped within a $5 range, which is between the 1,815 and the 1,810. And with the situation we have here, it is very obvious that there is an indecision in this market, as participants are still not in view of what where price action will be going. So before I go into the details on what our expectation have for today, I want us to quickly run through the daily time frame. Let's see what has really been going on in this market, and let's put this current structure in comparison with what we have on the daily time frame. So I will be moving up into the daily time frame now so that we can have a better and holistic perspective into what is really going on here. So at the beginning of the week, we acknowledge the fact that price has been bullish in the last 4 to 5 months. As you can see, we connected the series of higher lows here to give us to buttress the strength of the buyers in this market. In fact, we have a couple of trend line here. We have a temporary trend line here which has been guiding bullish momentum, and then we have the major one here. When projected, we have the second one here. Now if we zoom into what has been happening here since the beginning of the year, you will see that price finally broke out of the zone around the 1,820 and the $1,800 level at the beginning of the year to inside that bullish momentum that we have been witnessing since the beginning of the year. And after the retest of the 1,950, we saw our price crash to the downside, doing a little breakdown of that bullish trend line that we identified earlier, breaking down the $1,820 a little bit. And during the course of last week's trading session, we saw this bullish momentum, which we were lucky enough to be part of, as price action culminated at the 1,860. Now at the beginning of the week, we acknowledge the fact that we are at a critical point in this market, that is the area around the 1,860, where I said we have a confluence with the bullish trend line. Now with the breakdown of the bullish trend line here, you all know that whenever we have a breakdown of a structure, technically we expect that price action will at one point come back to do a retest of the structure that was broken to incite another trend continuation to the downside. And this was part of our anticipation for this week, as we were looking forward to selling pressure below this area to signal a bearish momentum. And in fact, this was exactly what happened in the last 24 hours, as we saw price action drop significantly. Well, in fact, it even broke down the 1,820 level, which is the area where price action started the new year. Now with the situation of things now, price trading currently below the 1,820, what is going to be our expectation? Well, I would like to extend the 1,800 level further to the future too, as well, as this is also a yardstick for trading activities. Needs to be considered too while we plan out what our expectations will be like for today. Now the 1,820 level is below the 1,820 level is where price action is currently trading. And if we zoom out into the past, that is the second half of last year, you will see that below the $1,820 level has been a strong selling niche for participants in this market. In fact, this ran through till the end of the last year, as we saw multiple rejection of that area by the sellers to negate all bullish attempts in this market. Now with the situation we have right now, as price action is back into the supply zone that was identified earlier, which was broken at the beginning of this year, we should acknowledge the fact that we are within the seller's zone in this area. But we need to see some confirmation that will give us a clue that sellers are still very, very strong in this market. And as a result of this, we want to see how price action will be reacting to the $1,810 level, which appears to be where price is right now. As you can see, last week's trading session, we saw how bullish momentum began from that 1,810. So selling outrightly doesn't make any sense here, unless we see a significant signal to buttress the strength of the sellers. Remember, this area has a strong memory for buying niche. As you can see, we had a buy pressure resume here last week, and price action is back in that zone. And what we have been witnessing here in the last 8 hours is that bullish momentum is building in at this point. So are we going to be seeing a profit taking activity that might bring price back into structure? This is what we are going to be looking at as we scale down to the lower time frame. Or are we going to be seeing a trend continuation pattern which will lead to the breakdown of the 1,800 to further emphasize the strength of the sellers? So in that regard, we shall be scaling down into the 1 hour time frame to see how participants in this market has been reacting to the 1,810. Now scaling down into the 1 hour time frame, let's go back into what we are looking at the beginning of the session. So I will zoom right into the current structure, as that is where our center of focus is going to be for today. Now our center of focus is here. So we have a $5 range, that is price action is trading within the 1,815 and the 1,810. And you all know what we look out for whenever we do have this kind of flat channel is to be patient and wait for either a breakout of the channel for buy opportunity or a breakdown of the 1,810, the support line, for selling opportunity. Now, as you can see, since the later part of the New York session, the 1,815 has been a strong selling niche, negating all attempt by the buyers to break out of that structure. And with this kind of situation here, we need further confirmation for us to ensure that a bullish momentum is valid at that point. So with the situation we have here, we might likely see price action do a counter trend opportunity. Since we had an impulsive move to the downside before, we might likely see some profit taking activity where price action might retrace back into the structure that was broken at the 1,839, which also shares a confluence with the bearish trend line that we identified on the 4 hours time frame. So if this kind of scenario happens, then definitely we want to be part of the counter trend opportunity back into the structure, with the hopes that price action will respect that level one more time to incite a trend continuation to the downside. So now, in order to look at what is going on here, we need to scale down to a much lower time frame. But before I scale down, let's look at this too as well. And if the sell pressure here continues to negate the attempt by the buyers, then a sell below the 1,810 level will happen if price action breaks down that structure. Now, look at between the resistance level here, where we have been seeing selling pressure in the last 12 hours, and this area is about 400 pips. Are we going to lose this all 400 pips before the breakdown happens and join that decline? Well, to further understand this, we need to scale down to a 15 minutes time frame. And when I scale down to the 15 minutes time frame, this is what I saw here. Let's zoom in. Let's zoom in so that we can see things clearly here. So this is what we saw on the 15 minutes time frame. And okay, this is the 1,815. I want to bring this in so that it won't disappear into the edge of the screen. Now, I was able to identify a simple setup here on the 15 minutes time frame, which I want us to be using to guide trading activity for today. Now, with the situation we have here on the 15 minutes time frame, this is what I saw. The continued selling pressure here is a suspect. As you can see, buyers have been trying to break out of that structure. In fact, we had something like an hammer candle here, but this was followed immediately with an engulfing bearish candle, which further emphasized the strength of the sellers at this point. Now, coupled with the bullish trend line here, after connecting the series of higher lows within the channel, we can see that price action appeared to have broken the bullish trend line to give us a signal that the trend line may no longer be strong enough for bullish momentum. And in that case, I want to be having my sell stop order below the $1,813.50 level as price action comes back to retest structure here. And if selling pressure continues, then we want to see a big bang breaking down the 1,813 level, doing a further breakdown of the 1,810 level for us to be able to add more position to our existing trade. So this is what we shall be looking out for to sell the XAUUSD. However, if bullish momentum continues in such a way that price action breaks out of the 1,815 level, the resistance point of that ascendant channel, of the flat channel, we want to see some buy pressure above the structure in our lower time frame to give us further confirmation to join that counter trend opportunity to the upside. But I doubt if this is going to happen, but if it does happen, we want to be on standby to take advantage of that move. So on this one, I still remain bearish on the XAUUSD, but if it happens that a breakout of the $1,815 triggers, then we are in for a counter trend opportunity. And if you are in for this counter trend opportunity, remember, We are on a long-term bearish momentum, hence we need to be moving our stop loss accordingly to secure the current position. So that is that on the XAUUSD. If you have any questions, feel free to drop your inquiries in the comment section. Now, moving on to the last pair of today, which is the USDJPY. I'm going to run through the USDJPY quickly so that I meet up with my time frame. Okay, so the USDJPY too was also a profitable trade for us yesterday as we rode the move all the way up. Remember, we had the 136.00 level, which has been serving as a strong resistance point since the beginning of the week. Remember, price action was quite choppy since the beginning of the week. We had a consolidation phase, which further emphasizes the indecision at that particular point in time. And with the resistance point at the 136.00 level, we anticipated that buy pressure might come in, as we already cited the breakout of the bearish trend line here, which was holding certain pressure since last week. And as a result of this, we anticipated a breakout of the 136.00 level. We had a buy stop order right above that level. We had a buy position triggered. In fact, the market gave us another opportunity to join as it gave us a retest of that level. And since then, price action had continued to find higher highs. So with the USDJPY, I had like 3 positions running as we continue to add position. And I told you yesterday that if price action breaks out of the 137.00 level, we want to be adding more position to our existing trade. And with the situation we have here, if you are done accordingly, the first position gave about 150. Second position gave about gave about 140, and the third position gave about 60 pips. So that's about 400 pips thereabout on the USDJPY. So for those who are taking their profit on this one, well done. Kudos to you for being on standby to have caught that move. And for those who are still having the position running, well, I would advise you to move your stop loss right now, and an area to move your stop loss will be around the 137.200 area, somewhere right above that structure at this point. Now, with the situation of things right now, are we going to continue to be looking forward to buying opportunity this today, or we might be getting ready for another wave of bearish momentum? Now, if you look at the current structure here, since the New York session yesterday, you can see that price, it appears that the bullish momentum that began yesterday was gradually thinning out. As you can see, the engulfing candle continued to reduce as price action continued to find higher highs. And one thing I was able to identify here during the early hours of today was the structure had the 137.500 area, which was initially a resistance point during the early hours of today. We saw the breakout of that structure here, and then price action came back. We saw some attempt around this area by the buyers to continue to the uptrend. But what we saw here was a breakdown of that bullish trend line, breakdown of the 137.500, and it's at this point we want to be having a sell position triggered. And one thing I want us to note about the sell position below the 137.500 is the fact that this is a counter trend opportunity. And if you are not a counter trend trader, or you don't feel comfortable scalping, well, I will advise you to stay out of this trade and then have a wait for this retracement to end before joining another wave of bullish momentum. So for those who are scalping this one or want to take a counter trend opportunity, ensure that as soon as price continue to move in our direction, you move your stop loss accordingly to secure this position. In fact, we have a potential of about how many pips? Let's see quickly. So we have this impulsive move to the upside here. The impulse leg started at around the 135.540 as price action moved into the structure. So we might likely see a retracement of that impulse leg into our golden zone area. So let's quickly use our Fibonacci retracement tool to identify a potential buy zone and at the same time a potential TP target for counter trend traders in this market. So we shall be looking at the golden zone area, which always falls within the 50 and the 78.6% of the previous impulse leg. So we have the potential, let's label this potential TP target for sellers, okay, and then we have a potential buy zone. Hold on a second, I think I made a mistake there. Buy zone. All right. Okay, so we have this. Hold on a second, I need to place this right within that box. All right, let's quickly do this and give this a yellow color so that all right, beautiful. So let's delete this, we no longer need this anymore. So if you have your sell position triggered below the 137.500 level, then we want to be having our TP target sitting within the 136.735, which is about 75 pips minimum, and a maximum of about 136.00 level, which is about 140 pips, if that is going to be the case. And remember, the 136.00 level and the 136.200 is an area that was broken yesterday, and you all know from a technical standpoint, whenever we have a breakout of structure, we expect that price might likely come back to do a retest of that level in anticipation of another wave of bullish momentum. So for those who are joining this the counter trend to the downside, this is where our TP target will be. And for those who are not comfortable taking counter trend opportunities, then we want to hold on for buying opportunity to come within this bus stop here, and this will definitely show up in the form of a reversal pattern. It could be your double bottom structure, your inverse head and shoulder pattern, your falling wedge, whichever case it is. Breakout retest on our lower time frame, then we could join that rally to the upside. Then another thing I would like to share here is that we also want to be taking the 137.00 level into consideration too as well. This area has been a strong selling zone in the past. We finally saw the breakout of the structure here yesterday, and we might likely see some buy pressure resume around the 137.00 as well. So for those who are taking the sell position here, ensure that you continue to move your stop loss to secure your position, and if price gets into the 137, move your stop loss even more closer to your price, as we want to see our price action will be reacting to the 137 to decide if we want to be adding more sell position there or getting ready to join the second wave of that bullish momentum. So this is what we are going to be looking forward to if price action continues to trade below the 137.500. Now, if price action climbs back up the 137.500 and we start seeing buy pressure above this level, if possible climb above that bullish trend line back again, then we should be seeing the breakdown of the trend line as a false breakdown. So what this simply means is that it will have taken out the counter trend traders, and then if buy pressure resumes there, then we want to be buying above the trend line. And if this continues in such a way that it breaks out of the 138.00 level, then that will be welcoming additional position to our existing trade. So these are my views here on the USDJPY. I hope I made myself clear, and ensure screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So before I call it a day here, I would like us to do a quick recap of what we talked about today, especially for the sake of those who are not part of the beginning of this live session. So the first commodity we looked at today is the US oil. And the US oil, we already have a simple setup which we have identified, and this will definitely be the basis for our trading activity for today. So we already have a channel within the $78.80 level and the $77.20. And the structure we have here has a high chance of transitioning into a reversal pattern, like a double bottom structure. So we already have a buy stop order right above the $77.80 level to anticipate a counter trend opportunity. And if it so happens that this consolidation phase transposes into a trend continuation pattern, then a breakdown of the $77.20 level will be triggering our sell position on the US oil. So I implore you to be on standby to be part of any of these opportunities that finally comes in during the New York session today. Then we went on to talk about the US tech, and as you can see right now, we already have a buy position triggered just right above the 12,170. And I told you that we should be having our stop loss somewhere right below the 12,130, as the buy position will continue to be monitored here. Now, if price action tests the 12,000, 1200, we move our stop loss accordingly to secure this current position. And now with the situation we have right now, if this continues to move to the upside, then a breakout retest of the 12,200 level will welcome additional position. Now please note that this is a counter trend opportunity, and it's very important that you monitor this price action judiciously so that you can be able to be moving your stop loss accordingly to secure this current position, as this move is likely and has a high chance of being a retracement phase of that previous impulse leg that we witnessed yesterday, which might likely incite another wave of bearish momentum. So let's keep this in mind as well. Then we went on to talk about the GBPUSD for today, and on the GBPUSD it appears we already have a buy position triggered here at the 1.18400 level. So let's ensure that we continue to monitor this price action as we move our stop loss accordingly to secure the current positions. And remember, we have a structure around the 1.191 area which shares a confluence with the bearish trend line, and also it was a strong demand zone in the past which was broken yesterday, and we have said we are going to be looking out for selling opportunity around this area if price action goes that far. So let's be on standby for that one too as well. Then we went on to talk about the XAUUSD, where we had another structure here as well on the XAUUSD, a simple flat channel between the 1,815 and the 1,810. And to further emphasize and show the importance of the structure, we scaled down to the 15 minutes time frame to identify a simple setup here, which I said we should be using to guide trading activity for today. Let me zoom in so that we can see. So right now it appears that price action has broken out of that $1,815 level to trigger a counter trend opportunity in this market. And for those who are taking advantage of this, well done. Please note that this is a counter trend opportunity, and it is very important that you continue to monitor price action, move your stop loss accordingly as price action is being monitored. For the buy stop order, our stop loss should be somewhere right below the $1,812 level as we continue to monitor price action. So this might likely turn out to be a false breakout, so we should keep that in mind too as well. So our sell stop order still remains below the 1,813. So if this turns out to be a false breakout, a price drops below the 1,813 will trigger our sell position and take us out of the buy position, and we look forward to more opportunities at the breakdown retest of the 1,810. So let's continue to monitor price action here as price action continues to the upside. Now we went on to close the day with the USDJPY, which for those who are doing the counter trend here, selling the breakdown of the 137.500, we already have a zone here for our TP target, which I also said it's going to be an area we shall be looking out for potential buying opportunity. And I also laid emphasis on the importance of the 137.00 level, which has been a strong supply zone in the past. And with the fact that this level was broken during the New York session yesterday, we want to be taking into consideration how price action will be reacting to the structure to decide if we are going to be adding more position to our sell position or getting ready to join a bullish momentum if we start seeing multiple rejection of the 137.00 level evolving into a reversal pattern to join that trend continuation to the upside. And I also mentioned the possibilities of breaking out of the 137.1500 if price action takes us out of the sell position, climbs above the bullish trend line, then above this level will be an area to look out for buying opportunity. A further breakout of the 138.00 level will definitely welcome additional position in that regard. Now, for us to identify the breakout of this bullish trend line, for us to join that bullish momentum, it's important that I help us to identify a structure which we can use to guide that trading activity around that area. So let's quickly do this. Let's have a resistance point here, and let's label it for the sake of clarity. So I'll be giving this a dark green color. So we have the 137.650. So we have the 137.650 level. So if it happens that price action takes out this counter trend opportunity and climbs above the 137.650 level, then with buy pressure above that structure on our lower time frame, then this will be welcoming a buy position for us on the USDJPY. So on this note, I want to be calling it a day here. It has been a wonderful moment with you guys. I really appreciate your attention, and please note that we don't want to get too excited whenever we have breakouts of structures, as we need further confirmations to support the direction of the breakout. By scaling down to our lower time frame, we begin to see things more clearly. Look out for retest of structure supporting the direction where the price action has broken to. Then we can be able to feel comfortable to join that real rally or decline. So, well, you're welcome everybody, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review all the pairs we have been monitoring to see how well they are doing so far, and at the same time get ready for the New York session tomorrow. Do have a wonderful evening, everyone. I see your comment, my Gigi, and best of luck today. Bye bye.